Hey guys, Akil Stokes here. Welcome back to another weekend trading video. Thank you as always for joining. If you are brand new, I'm Akil Stokes. I'm a full-time trader. I am also a trading coach over at tier1trading.com. And this is a weekly video that I put out along with lots of others, showing you what's on my radar for the week ahead, and of course providing you a lesson about the markets. Today's lesson is going to be about a few lessons. One, about continued education, having a growth mindset and your ability to adapt and evolve as a trader. The other lesson is going to be about taking targets, and I'm going to walk you through my method for how I think like the other trader to decide where I'm going to take targets for my current trade. So we'll pop right into it, but before we do me a favor. There are 2 ways you can support this show, or 3 ways you can support this show. 1, hit that like button. Everyone can do that. 2, subscribe if you're not subscribed already. 3, leave me a comment or share it on your social media outlets. Again, trying to get to 50,000 subscribers by January 1, 2022. We're close, but I need you guys to keep pumping it out there and keep spreading the word. So I appreciate it in advance, and let's hop into today's episode. So we're going to revisit the pound yen once again. If you didn't see last week's video, make sure you go and check it out. We talked about kind of a higher time frame idea with a weekly potential head and shoulders pattern. You can kind of see it here. It's a little bit clearly on the weekly, but overall, we talked about that despite the pound yen looking to be extremely bullish, we're actually in that previous Brexit zone of resistance. So I wouldn't be surprised to see some type of consolidation or even a reversal. And we had some really good opportunities this week, kind of lower time frame on the pound yen, going down to the 240 chart, where we had a few things setting up kind of at the potential head of this head and shoulders pattern. We had 2 advanced pattern formations. I'll draw them on in a little bit. And now we have something else setting up. So if we go down to the 60-minute, the hourly chart, you're going to see our 2 advanced pattern formations. Here is the most recent one, X to A, swing high to swing low, A to B, B to C, and a CD completion right up there for that bearish bat pattern. And then previously we had another bat pattern looking like this, X to A to B, B to C, and a CD up here. So again, consolidation breeds pattern formations, an excellent time to start looking for these consolidative type of opportunities. But what we have coming next potentially was actually brought to me by someone in my live room. He said, hey, he was a little bit early when he first gave us the idea, but it's actually played out really nicely. I'll go ahead and erase these patterns for you here. Give me a second. But we also have a descending triangle setting up, right? So after this move down here, look what we've done, right? So we've tested a previous level of support. We've bounced up and found resistance, right? So normal swings in the market. Price has pushed down again, and we've held at that same level of previous support. We spiked through a little bit, don't get me wrong, but we never violated this level. We then rallied up again, and on this next rally, look what we've done. So we've not only technically put in a little bit of a lower low again, but more importantly, we have a previous structure high right here. On the next test, we have a lower high, which is often a sign that the bulls are losing momentum, right? They've tried to push up again. Either they've done so with less strength, or they've faced more strength from the bears pushing back down. And once again, we've come down to this same level of structure support, giving us a nice little base. So this is a breakout pattern called, or I guess a consolidation pattern, which I guess not all of them are breakouts, but this specific one is a breakout, like flags and whatnot and pennants, called a descending triangle. And what we would anticipate on this is a breakout to the downside. And again, that just aligns with the same prediction that we've made all the way from the weekly. Now we start talking about levels and where we can break out to. We're going to hop back up to a 4-hour time frame, maybe a daily. Let's go do a 4-hour time frame. Yeah, make it easy. We got 2 VS1 levels right here. So you can see we're holding currently at the first VS1 level. If you're new, that's the red box on your screen. That's our visual structure indicator. That gives us a previous level of structure looking left. And if you're looking for a good target location, well, there's nothing easier to do than just shift down to the next VS1 level, this secondary level of structure right here around 155.50s. So nice little breakout opportunity here on the pound yen, looking from 156s down to about 155.50s at a minimum, and potentially even lower. Next, we're going to pop over to the euro yen. This is a similar situation as the pound yen, but a little bit different. Similar, but not the same. And the pound yen is definitely graded higher in in my mind than the euro yen because of that overall perspective and really the what has happened recently with price action. But you can see that euro yen here on the daily. We're coming back down to really kind of a set of tweezer bottoms right here where price action has probed lower, got rejected, probed lower, got rejected. You can see that by the 2 wicks on the 2 previous candles. And then currently we ended the week right in those lows. If we go down to a 240 chart, you'll see kind of a clearer view of that. You can see a VS1 level starting to print as this becomes a level of previous structure support. Now, the difference between what's happening here on the pound or on the euro yen versus the pound yen is that, remember with the pound yen, we had those lower highs, right? Setting up a very specific pattern that gives us a very specific bias. We don't have that here on the euro yen. We do have multiple tests of the lows here, but as price action rallies up, we actually create not new structure highs because we don't have a break and close above, but we create a higher watermark here telling us that there is buying pressure. So as we come down to retest this previous level of support, we'll go one more time frame down to the 60. I'm actually looking, well, you can look for 2 things. This is going to be called a decision point, right? It all depends on how we deal at the structure. If we violate the structure to the downside, obviously we're looking to get shorts. There's a decent amount of opportunity to the short side. If we can hold this level, I do think it's a decent opportunity for longs. Now, I'm not aggressive enough, and we talked about this in the live room with a few of our traders where we're kind of identifying not problems, but maybe things that could be worked on in their trading. It's a polite way of saying it. And one of the things that we identified is just overshooting your targets or overshooting your predictions. And again, this goes back to a study that I read years and years and years ago, and I've done this in so many videos, but I believe that one of the main reasons that traders fail isn't necessarily because they're bad at taking trades. It's bad at taking predictions as well, where they call the right area, but they shoot too far in their predictions. So I'm not looking for a full move up here. Yes, that can happen. Maybe you can do secondary targets. I'd be looking for a move right to the midpoint, right? Our previous level of inside structure right here. That should line up with a 50% Fibonacci retracement to Fibonacci retracement tool from my swing high to my swing low. You can see it's right below that area. If we get any signs of a hold, any signs of a reversal, double bottom 26.18, I think that's a good buy down here. And vice versa. If we do break that level, I'll hop back out to the 4-hour real quick. I think we can go test our next VS1 level to the inside, right? Our VS1 is going to be right here about 130.75. I would just shoot that up a little bit to about 131, maybe even 131.20s if you want to be more conservative. So key decision point. I don't know what's going to happen here. I'm not going to pretend like I do, but this is where we use that if-then syntax. If this happens, then we do this. If that happens, then we do that. Next up is going to be the pound New Zealand. We're going to look at a continuation trade here. And again, that's a perfect opportunity to go through that IPDE process, identify, predict, decide, execute, right? We got the help of our VS1s here as well. So we can identify that our most recent move was a violation of structure, right? Purple box was violated, lower low, lower close. If you guys are into candlestick analysis and the daily prediction, again, that's a video that we did a few weeks ago. This is why you got to stay in the mix and watch each and every one of these because they tend to build on each other. But on a daily prediction, we talked about looking at daily candles, reading the story of the candle, and using that to help us in our daily prediction. And you can see how we ended the week. This candle, what would you say, right? Would you say it's a bullish candle? Would you say it's a strong bearish candle? Would you say it has a lot of qualities that make you think reversal to the upside, continuation to the downside, right? Learn how to read this stuff. It's very important. Just getting away from the charts really quick. I talk about my story a lot. I'm known as this pattern trader, at least I used to be, because patterns was the main way I traded when I first got started in the market. Now, when I say I first got started in the market, that's after years of failure. But when I first kind of refound myself, my final restart, when I first started getting good and never looked back, I started off with patterns because they were something simple. They were black and white. It was really hard for me to F up a bit, basically. As I evolved and got better, and I am a student of the game, I went back to the basics and the very basics of what's the smallest thing we do in the market. It's reading an individual candlestick and really learning how to read and understand a candlestick and have that affect my predictions as well. And I recommend, when I teach now, it's the reason why it's the first course in our kind of the whatever, how many training courses we have, because I do think that if you have that foundational knowledge, if you have that kind of solid backbone of being able to understand and interpret the thing that makes up all of the other things that you will ultimately trade, I think it gives you a distinct advantage. So I know everyone wants to rush to the strategy. I got a few emails this week. I get them every week that say, Akil, do you have a strategy for this? Do you have a strategy for the daily? Do you teach this strategy? And I always respond like, yes, we teach strategies. I don't want to kind of, put that point to the side, but that's not the main point. What we're teaching you is the skill of how to trade. And ultimately, if you have that skill of how to trade, you can develop your own strategies, or you can take the strategies that we have and make them your own. But the cool thing is, again, if you have that skill, you can be very dangerous in any market. I got another email, thank you email this week from a guy that says, hey, Keel, I don't trade Forex. I trade commodities and something else. And just want to say that your stuff has been super helpful. And it's really cool to see those comments, because I think it's important to understand that the skill of technical analysis is needed, no matter what market. As long as you're looking at a price chart, it's important. So while we're on the subject, I want to bring up one more point. And I shared something on social media today. It was a post of a screenshot from a book I just bought called, what is it called? A Complete Guide to Volume Price Analysis. It was recommended to me from a trader I was having a conversation with on Instagram. We're talking about volume and whatnot. He said, hey, check out this book. So I ordered it and popped it open and started taking notes. And I got a comment under the post. The post basically just said, hey, I'm enjoying reading about or learning about reading the tape and all that fun stuff. And it said, sometimes I wonder if consistently profitable traders still read up on particular niches they have become masters at. Seeing what you're doing this weekend is great encouragement to me and prepares me for this unending learning journey. I took out the time to back test today. And I think it's important because successful people, not even talking about successful traders, successful people in general have a growth mindset. And the difference between growth and a fixed mindset is a fixed mindset is when you're locked into one way of thinking, you know it all, or there's no need to know anything else. It's your way or the highway, and you've hit your ceiling because you're not open to learning more things. A growth mindset is someone that always wants to learn. They always want to grow. They always want to develop. And I can tell you this from firsthand experience, right? If I didn't have a growth mindset in trading, I would not be where I'm at today. I just mentioned that I started off learning about advanced pattern formations after kind of being bad for a while. And there was a point in time where I said, hey, I'm doing something, it works, it makes me money. I never need to do anything else again. I'm sure you guys have been there as well, where maybe you've back tested something or traded one thing and it's working great, and all of a sudden you start seeing the rest of your life of just doing the same exact thing for 30, 40 years down the road. Luckily for me, because I was swing trading mainly on the 4-hour time frames, I was getting maybe like 4 opportunities a month. So I'm a full-time trader. There was a lot of downtime throughout the day. So I had 2 options. One was to stare at the charts all day and get tempted to take trades I'm not supposed to be in, or 2, just continue to learn more about the market. So I just continued on my journey of knowledge, watching YouTube videos, signing up for different courses. I took a course on Elliott Wave. I watched this, I watched that. I read a bunch of books. You can see in the background behind me, I have a massive library, right? Tai Lopez type style. I've got these Lamborghinis, but the most important thing in this garage are my books. But I actually read them all instead of the Tai Lopez deal. But seriously, understanding that gave me the encouragement and motivation to continue to grow. And what I've seen in my, 15 years of trading now is that if I would have stuck to the same thing I was doing 12 years ago and I didn't add anything else, I didn't change anything else, it was just that one set way, I can tell you, honestly, I would not be as profitable as I am. I would probably be right above break even, because advanced pattern formations, right, although they were killing it when I first started trading them, there was a period of time where they leveled off and they've kind of reverted to the mean where they're still profitable, but not as profitable as they were back in those 2010 to 2012, really up to 2014 type of markets. Things have significantly changed. And again, it takes that growth mindset to continue to build, continue to add, continue to really even tweak what you're currently doing if you want to stay up to date in the market, if you want to be consistently profitable for the longer term. So if you're a new trader out there and you think it's as simple as, hey, I just want to learn one thing and that one thing is that one strategy is going to last me forever, trust me, you're kidding yourself. The most important thing you can learn is how to trade, because if you learn the skill of trading, you can adapt your current style to whatever the new market conditions are, or you can continue to learn and develop new styles to take advantage of the present market conditions. So this candle gives me a very strong bearish vibe. Not only do we have a close at the very bottom, which is a strong signal, the lower third, but we have a massive tail to the upside, which means at one point, price tried to retreat, the bulls tried to push up, and the bears smacked them in the face and pushed them back down. So we have all that happening at the end of the week, crazy end of the week, because it's the end of the month as well. But we also have a violation of structure. So my assumption is that we're likely to continue lower. So if we're going to continue lower, where are we likely to continue lower to? And what I want to do is I want to identify some key levels of structure. So there's a few things I can do here. I haven't done this in a while here in the Trading Edge video, but we do it in the live room all the time. We can kind of reverse CTS it, right? So CTS is combined technical score. It was a strategy or a system, I should say, that was taught to me by my mentors, where you take all the technical setups and technical tools that you use and you quantify them. That way you can judge your trade on a point scale. But what's much more important than the actual point scale is it allows you to be consistent. So imagine going through a checklist. You're looking for the same things every single time. You're looking at this, that, this, that, this, that. Whereas inconsistent trader, sometimes you're looking for this, sometimes you're looking for that, right? There's no consistency in that when you're kind of doing this, sometimes you're doing that the other time. So if you can consistently look for the same things and require the same things, it allows you to be consistent in your trading. And you guys know the phrase by now: consistent analysis plus consistent execution, say it loud, say it proud, equals consistent profits, right? So we're going to reverse CTS this. So we're going to basically analyze the market as if I were looking for a buying opportunity, and that's going to help tell me where I should probably be looking to sell at. So let's take an AB equals CD pattern, a one-to-one measured move from swing high to swing low. So this is going to be my A, my B. This little guy in here is going to be my B to C, and this is my C to D right down here. I can combine that with a Fibonacci extension. So I'm going to take my Fibonacci extension tool from that A leg to that B leg and back up. See if I have any Fibonacci influence there. Doesn't look like I'm going to have much, but I'll keep those on. And then I'll look for structure as well, right? So if I just drag a line on my AB equals CD pattern, oops, wrong tool. Hope I didn't destroy anything or hit the wrong button. But you can see look left, structure leaves clues. That's going to line up right with a previous level structure. So I'm going to shift this a little bit up. That's just because I know how I measure my structure zones. And actually, I'll draw in a box for you guys. I think this is a really good zone to look for shorts, right? Going down to at least $1.90. Nice psychological level in there. If we get a pullback here, we can go down to a lower time frame. It's going to offer a lot of opportunity. So again, doesn't look like too much, even though 190.75 to 190s is, I think, pretty decent. I'm not. That's 75 pips is fine by me. I know some of you guys like super home runs, but imagine if we get a retracement, let's say back up to this little structure swap type zone right here. All of a sudden, now you're looking at 191.75 down to about 190s, which is an entirely different type of projection. So pretty cool opportunity there on the pound New Zealand. Also great opportunity at how we use the CTS and really my target taking method, which is called think like the other trader. You're welcome.